Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. Inflation data's not so bad lately. So what is the Federal Reserve waiting for to make its next move? Fed whisperer and Wall Street Journal correspondent Nick Timiraos.
If you're saying everything's okay to cut, well, why aren't you doing it now? What are you waiting to see?
And the countdown to the Paris Olympics is on.
Coming up right around the corner. Are you packing your beret?
I'm going to buy one when I get there.
Berets and bets. Sports business professor Patrick Rishe has the odds on the Olympic gambling market.
I would be impressed if it was even a third of March Madness, which would put it at about $1 billion. I don't know if it will get there, but it is going to be bigger than it has been in the past.
All that today, plus a high-stakes press conference from President Biden and European regulators cracking down on another American company.
They don't even need an economy anymore, I don't think. They can just
collect global revenues
from the U.S.
6% of global revenues.
It's Friday, July 12th. Squawk Pod begins right now.
Stand by in 3, 2, 1. Cue, please.
Good morning and welcome to Squawk Box here on CNBC. We're live at the NASDAQ market site in Times Square. I'm Melissa Lee along with Joe Kernen. Becky and Andrew are off today. Nice to be back on this Friday.
Nice to have you.
Let's start off with the markets. Tech stocks dragged down the NASDAQ in yesterday's session. Closed about 2% lower. The S&P 500 fell by about 0.9%, breaking a 7-day winning streak. The Dow also closing slightly higher here. Among the big tech decliners, Tesla was down 8.5%, Nvidia down 5.5%, Microsoft and Apple each fell by more than 2%. And amid the drop in tech stocks yesterday, the Russell 2000 small cap index surged higher by 3.6%. Bespoke Investment Group points out that yesterday was the second day, just the second day since 1979, when the Russell 2000 rose by more than 3%, while the S&P 500 declined. So what did that tell us about yesterday's session?
I immediately was
equal weighted.
Yeah, I was thinking about the NASDAQ, and that's what I was looking at today. Just to get some perspective. Not saying it's 1999.
Oh, you think that it's like...
No, it's just, it's AI is very powerful, but in October, how long ago was that? Was that 9 months? I think it was 9 months. 12.5? 12.5, we're now 18.2. If you go back just a little bit further to late...
In terms of the run.
Well, that's almost 50%.
Yeah.
In 9 months. And if you go back to late 2022, you're basically talking about 10,500 to 18,500. You're talking about 80% since Christmas, right before Christmas in 2022. When you look at the chart, I mean, it looks like, a tree growing to the sky. AI is very powerful. NVIDIA is I understand all that. Building it out makes NVIDIA very profitable, but there better be some real profits from AI for everybody else once they build it out.
Return on investment.
To justify.
Yeah, exactly. The spend. Justify the spend.
The spend and where the NASDAQ is. And I don't know. It's not 1999, but don't you think that maybe we're ahead of ourselves, or no?
Maybe it's time for some of the other groups to participate, which is exactly what we saw in yesterday's session. The Russell 2000 RSP, the equal weight S&P 500, that was, what advanced in terms of relative performance,
right,
versus the S&P 500. We saw strength in biotech. We saw no surprise. We saw strength in home builders, REITs.
See,
interest rate sensitive stocks.
You get to say all this stuff because you summarized everything that happened yesterday at 5 p.m. That's invaluable. That is invaluable. I should watch and then come in here.
You don't watch?
I don't all the time. I mean, there's only so much business news, after watching it every hour throughout the day.
So you watch every hour throughout the day and then you stop at 5 o'clock?
That might have been exaggeration. No, I do. Okay, I do. But I do think it helps too, because you have all those guys and they're all talking about biotech, talking about everything that made moves yesterday. Really, a quarter point cut is so great that all this is warranted. That's also it too from those numbers
when the odds go to 90+% of a cut.
So it's good. Maybe because maybe it's the end of the the tightening cycle, and maybe inflation's under control, and maybe we don't need to keep tapping the brakes on the economy. Okay, so those are all good things.
Yeah.
Okay.
Futures at this hour higher across the board. S&P 500 looking to be higher by about 8 points. The Nasdaq also looking to gain by about 15. Treasury yields, meantime, after yesterday's decline, 4.229%. So we're a little bit higher on the 10-year yield. The 2 years at 4.525.
Do you have a fast money planner? You don't have a fast money planner.
I guess we don't plan.
You don't plan. You don't plan squat. Do you?
We don't plan squat.
Pops and drops. We
That
stole
segment
that
has
from
not.
you. We stole that from you for a while, and then we don't.
We
How long
lent
ago?
it to you.
Yeah.
We allowed you to
We
use
do.
it.
You may not. We do have a Squawk planner.
Thank goodness.
And
I wouldn't know what I'd be doing today.
You want to know what's on it?
If not for the Squawk planner.
PPI's coming today. More inflation data is ahead. We're going to get the June read on producer prices at 8:30 a.m. Eastern, and we're going to have a panel and talk about it.
I'm writing that down.
We had a panel yesterday.
To discuss
It
what CPI is big.
And it actually got into, it's just, you cannot get politics out of, you can take politics out of but you can't, it still came to that because one individual was talking about the reason that real wages haven't risen is because of all the low income jobs from all the illegal immigrants that have come in.
Yeah.
And now, and I said, well, that's part of the problem, isn't it? And she goes, no, these are people seeking, that are here seeking asylum, and it's all fine. And I said, well, 10 million in a couple of years is okay? And it was like, yes. So even a business discussion, luckily it does, because November's coming, and we will talk a little bit about last night, I think. Did you watch?
We will, and we will talk about Trump's policies and how inflationary they are perceived to be.
We did yesterday. You did do that, yeah. Although the 10-year immediately, even when it looked like after the debate, looked like he was more likely to be the president, 10-year went up 20 basis points in yield and then pulled right back in the next couple of sessions. Speaking of last night.
Yep, now to President Biden's news conference last night at the NATO summit. Megan Cassella joins us now from Washington with the big takeaways and the reaction from Democrats. Good morning, Megan.
Good morning, Melissa. It was a busy night. It was an hour-long press conference that showed Biden defiant. He declared over and over that he was staying in the race, that he was the best candidate to beat Donald Trump, and that he was physically and mentally up to the job.
If I slow down, I can't get the job done. That's a sign that I shouldn't be doing it. But there's no indication of that yet. None.
Biden spoke at length about foreign policy and the economy. Many of his allies saw that as a strength. I heard from one who told me, this isn't a man who has dementia. But there were also moments that his critics are seizing on as evidence of why he does need to step aside. Listen to this.
I wouldn't have picked Vice President Trump to be vice president, but I think she was not qualified to be president. So let's start there.
Now, all of this still leaves Democrats in limbo. He didn't do well enough to satisfy everyone, and 3 congressmen, Jim Himes, Eric Sorensen, and Scott Peters, called on him to resign just after it wrapped. But he didn't make any fatal mistakes either. The issue is there's no solving for age, so the magnifying glass is still on Biden, and it will stay there as long as he's in this race. Guys?
There are reports too, Megan, that the UAW is meeting to evaluate their endorsement of Biden.
Yes, Reuters is reporting that they're concerned, that they're not seeing a path forward, and they're sort of debating what to do next. They had endorsed him, and that's something I think is really crucial because President Biden has long prided himself on just how close he is with unions and with labor leaders across the board. He visited with some just this week. So there's been a lot of talk this week about how, with the chattering class, as he likes to call it, the pundits and Democratic elites and the wealthy donors and the billionaires coming out against him, that kind of makes him dig in his heels even more. And he says, I'm not running for those people. I don't care about the millionaires. If we start to see more defections among union leaders like that one, that's something that could sort of dig into his ethos a little bit more. That's something he might start to listen to.
Megan, thanks. Megan Cassella.
You watched it. I thought, okay, there are times when you are thinking about your next sentence.
Sure, and you put a word in. Yeah.
That only happened twice. In general, it was not the debate, Biden. He was cogent. He was lucid.
He made very specific points.
Grasps of a lot of it. So Democrats who are, it's just enemy of my enemy. Democrats who are now in vulnerable positions themselves were disappointed that he didn't screw up more, which is a kind of a sick situation.
Because they want to strengthen the
that
top
was
of the
the
ticket.
same.
Yeah.
That was the same Joe Biden. It was Dark Brandon. He whispered. There were inappropriate smiles. There, all the things that we've seen for years. It wasn't any different than a year ago or 2 years ago. That's the same Joe Biden that they gave all the delegates to willingly as the head of the Democratic Party. That's the same guy. If they don't like him now after last night, it's because they're looking at the polls. Just like the UAW is looking at the polls. Just like other people are looking. Suddenly, George Clooney.
You can't fault them though for looking at the polls. They want to beat. They want to beat Donald Trump.
They want to stay in power.
They want to stay in power. They want a strong down ballot. That's what they have to do.
Fine. There's no loyalty to the guy that got them to this point.
That's politics, Joe.
I know. Maybe that's the real world.
It's politics.
Yeah, it is. But he's got all the cards, and he can stay. He's got the delegates.
He's got the money.
And he can say, you know what he can say. I'm not going to say it, but you know what he can say, for them to tell them what to do. And I think he's still going to after a while. And he can make, just like they said, some Democrats said that I didn't like everything. It didn't change my mind. But no one can say, oh my God, there's a smoking gun from last night. He was.
No,
He wasn't. He was the same guy that we see. Some of this I disagree with the. Inflation's because corporations are greedy, the sort of faux outrage about, guns and the stuff that we've seen from him again and again and again and again. But it was the same Joe Biden. So if you don't like him now, like George Clooney, if you don't like him now, this is you. This is you. This is not him. This is you for your own, whatever you're interested in. It's not Biden.
It's all about what an individual or a group is interested in.
How it relates to me, ever. Twitter, or X, the latest U.S. tech company in the crosshairs of the EU at this point. Regulators charging the social media company with breaching online content rules. Regulators said X's verified accounts with blue check marks do not correspond to industry practice and negatively affect users' ability to make free and informed decisions about the authenticity of the accounts they're interacting with. X has also failed to comply with EU requirement that companies provide a searchable repository of advertisements or advertisements. X also charged with blocking researchers from accessing its public data. The company could face a fine of up to 6% of global revenue if it's found guilty of breaching the Digital Services Act. Are you keeping track? How many is this? They're going to make
digital services.
They never need to have another. They don't even need an economy anymore. I don't think they can just
collect global revenues
from the U.S.
6% of global revenues.
Like they sponge off of us for all their defense needs and don't really pony up. Now they don't even need an economy. They can just get 6% of what all of our great companies do. It's a pretty good gig if you can get it.
Cheese will be next.
Still to come on Squawk Pod, inflation slowing down, the data getting better grades, maybe signaling a shift to come in the Federal Reserve's policy. The reporter called the Fed Whisperer, Nick Timiraos, joins us next.
But I think the big reveal isn't so much that we have to get straight A's anymore. It's that a couple of B's are actually okay, and that's because of what's happening in the labor market.
Welcome back to Squawk Pod.
Watching Squawk Box on CNBC, I'm Joe Kernen along with Melissa Lee. Our next guest's latest piece outlines how milder inflation numbers could open the door to a possible September rate cut. Joining us now, Nick Timiraos, Wall Street Journal chief economics correspondent. Nick, it's good to see you. Good morning.
Morning, Joe.
What's your count? How many friendly numbers do we have now on inflation after those tough ones at the beginning of the year?
Well, obviously, the last two, you give them an A or an A+. But I think the big reveal this week, Joe, isn't so much that we have to get straight A's anymore. It's that a couple of B's are actually okay, and that's because of what's happening in the labor market. And that's what makes this different from some of the optimism or expectations around a rate cut in the first quarter of the year, when it was really just being based on inflation being better, because now you do have the unemployment rate creeping up. Obviously, still at a historically low level at 4.1%. But better inflation with the unemployment rate going up, I think, is a different scenario from better inflation with the unemployment rate going down or staying, below 3.5% or something like that. So that's what's changed. Chair Powell in his testimony pivoted this week when you're focusing on both of your mandates again.
The economy has made considerable progress toward the Fed's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance.
To me, that's a real pivot as opposed to the kind of accidental or confusing fake pivot that we got at the end of last year. And so that was really the story this week, was that Chair Powell is focused again on achieving the soft landing, sees a bigger runway to do it, and is talking about a cooling in the labor market. He said that again and again. And so, that doesn't require tea leaf reading or whispering. He's saying it out loud.
Still maintains that we're in restrictive territory. Nick, do you think that the action in the NASDAQ causes anyone to really wonder how restrictive we are, or whether financial conditions are actually, able to shake off wherever we are on Fed funds right now? I mean, things are still pretty frothy in a lot of areas. Not so much in other, like you said, it is bifurcated. Not so much in other areas, but we're still rocking and rolling with the NASDAQ.
Yeah, I think a lot of commentators probably put too much attention on the equity component of financial conditions. So they'll say, oh, well, the stock market went up, financial conditions eased. I don't think that's the way that a lot of people at the Fed are thinking about it. I mean, let's look at the housing market. You see mortgage rates now, yesterday they came down below 7%, but for most of this year and for the second half of last year, we were looking at a mortgage rate above 7%. And so you have to wonder, how is that actually stimulating any increased demand for housing, for construction? It's not. And so I think, these moves in the equity market matter over time, of course, because price setters and wage setters will make hiring and investment decisions based on them. But I don't think that's really looked at quite as much by the Fed as the way sometimes commentators hold it out.
Nick, last week the renewed emphasis on the unemployment picture struck me as well. Do you think the market is underpricing this risk that, he said there are two risks now. It's inflation as well as the jobs market. Do you think the market is underpricing in that, the 90+% pricing in of a rate cut in September and no rate cut beforehand? I mean, do you think if we have a tick higher, significant tick higher, that a rate cut could actually be sooner, or the path could be steeper or decline more quickly in terms of rates because of the employment picture?
It's certainly possible. I mean, it's hard to see how you change the pricing for the July meeting, just given, there's not going to be that much data. There's not another payroll report. I guess you do get a couple of unemployment claims readings. I think the big development for July will be on Monday when we hear from Chair Powell. He's speaking in Washington. And so that's really his last chance to set expectations around the July meeting. I think, the big debate is most likely to be at the July meeting over what are you going to do in September? How much do you set the table for a cut in September? They have been prizing their flexibility, so maybe they don't want to lock themselves in with changes to the FOMC statement that really put, September kind of really well pointing to September. But at the same time, you're starting to hear from some of the doves on the committee, Austin Goolsbee last night, for example, saying, look, this is what we wanted to see. Inflation's on a path to 2%. If you think that policy is restrictive, if you're seeing evidence of that, if you think that the elevated inflation you have right now reflects lagged, catch-up pricing on shelter and things like that, and if you think the labor market is no longer a source of inflation heat, then it does raise the question, what are you waiting for? And so I think that's kind of where the trick is going to be in July, is if you're saying, everything's okay to cut, well, why aren't you doing it now? What are you waiting to see? And so I think that's the big question right now.
Nick, when I hit up I was going to take credit for NikiLeaks, but when I hit it up, your Twitter account on Google, your Twitter account does come up if you hit up NikiLeaks, and then something about Nicki Minaj. So which is it? Is it you, or what's really happening? Who came up with it? Can I say I came up with that, or how long have you heard that?
You can take credit for it. I have no idea who came up with that.
It's really good. It's really good. You don't want to go to jail, I don't think. He's out now, I think. Assange. All right, Nick. You know he doesn't. He's not very frivolous most of the time. He's very serious. Have you seen that?
Well, look at what he covers.
Exactly. Nick Timiraos, thanks. We always like having you on and getting. He's. I think that Nick Whisperer is.
Fed Whisperer.
It's pretty good. Yes. All right.
Up next, Squawk Sports. U.S. college athletes might be considered employees. And odds of an exciting Olympics? Bet on it. Sports business professor Patrick Rishe.
There may be a unique opportunity where some of the bettors, they know the market better than the odds makers, and that's where real profitability occurs.
You're listening to Squawk Pod. Here's Joe Kernen.
Stand by, Joe. His mic, cue.
U.S. Appeals Court ruled yesterday that college athletes in Division I revenue-generating sports, like football and basketball, can't be excluded from U.S. labor protections. That decision rejects the longtime argument by the NCAA that athletes aren't workers, but they're playing as student athletes. The athletes in the case have argued that they should be allowed to bring claims under the Fair Labor Standards Act that establishes rights to minimum wage, overtime pay, and restrictions on child labor. And the panel of judges said that the term student athlete is a marketing invention of the NCAA, and it would not use a term with such a dubious history to define the economic reality of athletes' relationships to their schools. The court also said that, in their words, revered tradition of amateurism was not a valid reason to prevent athletes or bar athletes seeking worker protections. The appeals court denied the NCAA's bid to dismiss the athlete's case and sent it back to the trial court to proceed. Over the past few months, the NCAA has paved the way for athletes to be paid as a result of a separate settlement, but had been seeking to hold the line still that players aren't workers. And we're going to talk more about all this with sports business professor Patrick Rishe. We may touch on something we care about too, the Olympics.
Oh, yes. Yeah, coming right around the corner. Are you packing your beret?
I haven't. I'm going to buy one when I get there.
Yeah, you're going to leave the one from the last trip to Paris at home.
What color do you think? You know what color? You know what color I'm thinking.
For the beret?
Yeah.
What color? Red.
Raspberry. You got to work with me. I can't believe after all this time.
All this time? I'm here like once every 5 weeks.
For 3 hours, and you talk about what a long 3 hours it is.
It's a long 3 hours.
More people than ever expected to bet on the Summer Olympics in Paris, fueled by the recent boom in U.S. Legal gambling. Sportsbooks are gearing up for a surge in wagers as the games approach. Joining us now is Patrick Rishe, director of the Sports Business Program at Washington University. And Pat, maybe you can just help me with normal odds making. I'm always in awe of how right and exactly where these odds are, how they're set, and it's amazing. How are they going to do that with every athlete competing at the Olympics? How do you get? Is it AI? Is it just the way the bets line up? Do you understand what I'm saying? How can we possibly pick a favorite when we have no idea?
I absolutely understand what you're saying, Joe. And I think the analytics people that help set the odds in Vegas would probably be in demand for any analytics team in professional sports. It is truly amazing. It's going to be tricky, right? And I think there's going to be opportunities for the wise guys, people that really know the markets of these different sports, whether it's gymnastics or swimming or whatever the case may be. There may be a unique opportunity where some of the bettors, they know the market better than the odds makers. And that's where real profitability occurs. But Joe, look, The Super Bowl betting this year was north of $25 billion. The March Madness betting was close to $3 billion. I'm going to be fascinated with increased legalization of statewide gambling. Where will that number be for the totality of the Olympics when it's all said and done? I would be impressed if it was even a third of March Madness, which would put it at about $1 billion. I don't know if it will get there, but it is going to be bigger than it has been in the past.
Than it has been. And what will be the most popular events, do you think? What's most suitable? I guess soccer, things like that. We do that already.
I think men's basketball, you're going to see the most action just because there's greater familiarity with basketball. And it's not just betting on who's going to win, because many people believe the U.S. men will run away with it, as will the U.S. women. But you can see a lot of prop bets, these exotic bets. So, for example, Anthony Edwards, Ant-Man of the Minnesota Timberwolves, he scored 20 or more points. What's the over-under? So those kinds of exotic bets, I think you'll see not just in basketball, but you could see it in gymnastics and swimming. Will someone be over under a certain time? Will someone score above a 10 or above a 9 on the floor exercise in gymnastics? There's a lot of opportunities in terms of betting volume because of these exotic bets.
You saw the just shifting gears. You saw the judge's decision. We're back to trying to figure out exactly what a college athlete is. Is there such a thing anymore? I mean, on the one hand, those schools would make no money without the people that are actually generating the fan interest. But what's the line we need to walk now, Patrick? What did this judge? How does it change things?
Well, again, we all know which direction this is going. And I think, Joe, you and I are in the same boat, that we believe that these student athletes all along should have been compensated for their performance. And, where is that line? Because once they become employees, and forget the pep that's scrambling in the background, once they become employees, Joe, what are the expectations going to be in terms of the number of hours that they could potentially be expected to work? What implications are there? I think that there's a lot of things that still need to be vetted, and obviously we're going to see how that plays out going forward. Right.
One of the provisions was got to be paid minimum wage. That'd be good. Not for the athletes. It'd be. I'm sure that everyone would certainly agree to pay. They make 100 times the minimum wage, or is what they're worth. How does that even apply? Some of these things, it just seems odd to even talk about it.
Joe, I think the craziest thing with what's happening, and I've talked to a lot of college athletic administrators, is that clearly the schools like Ohio State, Michigan's, Alabama's, Georgia's, they're the biggest beneficiaries because they have the greatest revenues. You take these middle tier schools, like in St. Louis, we have St. Louis University, where I went to college, UNC Charlotte. These are the schools where there is so much poaching going on that I could only imagine how difficult it must be to be an athletic administrator at schools like this, where if a kid comes in and outperforms, that a place like St. Louis University, UNC Charlotte, recruits a kid that maybe outperforms, good luck keeping that kid beyond their freshman year, because you're going to have all these larger schools poaching them with their collectives and everything else. So I think that's the greatest challenge for these middle tier. And I wouldn't be surprised at some point if you see the separation between the very top 60 or 70 schools versus all the other schools in Division I.
It's left the barn, though. I don't know. The toothpaste is out of the tube. What's your favorite?
I don't expect it to change. I think that there'll be even more change. Again, you can see the siphoning.
We're ahead of that. We're not going back. Thank you. Yeah, when are you back? Not for a while.
Not for the foreseeable future. Have a great weekend.
And that is Squawk Pod for today, and it's Friday, so for the week, thanks for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Thanks to Melissa Lee for her hard work this week. Tune in to Squawk Box on TV, weekday mornings on CNBC at 6 Eastern. Stream as part of Morning News Live on Peacock. Get the smartest takes and analysis from our TV show right into your ears anytime you want when you follow Squawk Pod. Follow this podcast wherever you're listening now. We'll meet you back here on Monday. Have a great weekend.
We are clear. Thanks, guys.